What's up guys, Jake here, welcome back. I wasn't going to make a video today, however, I thought the current events of today were a little humorous. So let's go ahead and check in with the other finance YouTubers. Now I know I'm not a very big channel, I don't have as big of an audience as these individuals, but you'll see a pattern here. Here's Jeremy from Financial Education, stock market crash, I do this, Graham Stephan, the stock market is out of control, the next market crash. How to make money. Here's Dumb Money Live. I really like these guys. Market crash, sell it all or double down. Here's JJ Buckner live streamed. The stock market crash is upon us. Lots of other channels doing this. They like live streaming these days, watching the market. And if there's any kind of volatility, they just call it a market crash. On my channel, I'm not going to do that to you guys. I understand it drives clicks and they do provide useful information. But I'm not going to try and clickbait you guys saying that somehow the stock market is in trouble. But let's go ahead and check in on the stock market and see how it did today with all these YouTubers talking about the impending stock market apocalypse, and the stock market was up 0.13%. The S&P 500 finished above where it closed yesterday. Now I understand that small caps didn't do as well as the S&P, but generally I measure the market as the S&P. If you guys want to speculate in penny stocks or in SPACs, you're on your own. But this is more representative of the U.S. economy. For there to be a stock market crash, the big players have to lose out. And for fun, we can see what the heck happened to Apple stock today. This is something I was looking about swinging into for my brokerage account challenge, and it was well, let's look at from the previous day's close. It was down 3.8%, and then it shot back up. I did not check the market this morning. I waited until lunch to have a look, and it was already uptrending back up at the time, so I didn't move in on it. And as of this morning, I was getting comments on my channel of people saying, stock market crash, I knew it. If you guys can't handle a 1 to 3% volatility in your stocks or in the market in general, then picking individual stocks and paying attention to the stock market is not for you. For your own physical and mental health, I highly recommend you do not pay attention to the stock market if the slightest bit of downtrending is going to send you into a panic. And to put this in perspective, let's look at the last 3 months. Let's go back to the November election, so November 2nd, up until today. The stock market is up 17% in 3 months. The long-term average of the S&P and the total stock market is 10% a year. So if we saw a 7% drop, the way I think of the market is, okay, well, I'm still beating the one-year average by a lot. I mean, even if it's down 7% and I'm only up 10 in 3 months, that's still an average for 30% a year. So I think people have become a little desensitized the last 11 months. The market bottomed because of the pandemic on March 23rd. The S&P is up 73% in 10 months. So yes, the slightest bit of, if it's a red day at all, people are like, what? That's not supposed to happen. For my brokerage account challenge, I'm sitting on about $7,500 in cash, and I was looking for some good buys. Let's go ahead and sort by the biggest gainers of the day. Las Vegas Sands, Twitter. For those of you not familiar, I have tracker shares in my brokerage account. These are just $10 fractional shares so that I can easily sort and watch all the companies I want to watch. Looks like Disney was up 2.74. Even these aren't very big price movements, nothing above 5%. When we look at the biggest losers for the day, PayPal down 3.25%, Home Depot down 3%. I'm not even seeing. Okay, so here's Tesla down 2%. Oh, big deal. It's definitely not a market crash. And I've talked about this on my channel before, but I think the market is just flooded with money right now. People have money to invest and they don't know where to put it. Bonds are not having a good yield. Crypto is at an all-time high. Gold is an all-time high. Real estate is an all-time high. Stocks really are the only game in town because its value is, intangible. What What will be the future performance of this company? Can you make an argument that its share price is worth what you're paying today? So people are going to keep buying stocks, in my opinion. Will the market crash? So think about this. A 10% drop from the high would be a correction. And that on average, that happens about once a year. It happens every year almost. And a 20% drop from the high would be, a bear market. And obviously we had one last year that didn't last very long. So the high that I can see here is the S&P made it to 3,934, and we're only down 1.36% from the all-time high. So we're probably going to go over that and over 4,000 as soon as the Dems push through their $1.9 trillion stimulus package through the budget reconciliation process. So no, I don't agree with these other finance YouTubers. I don't think that a 10% plus drop from the all-time high is happening for the market anytime soon. Something that will cause a lot of volatility, though, is the market did bottom on March 23rd. And for anyone who bought after March 23rd, they're trying to make it to 1 year. If you bought after March 23rd and you held for longer than a 365-day period, you can get favorable capital gains tax, either 15 or 20%. Anybody who sells before 365 has to pay short-term or their marginal tax rate. If you're a millionaire, that could potentially be up to like 35% or something. So there's a lot of big dollar investors who have been in the same position, whether it's Amazon, Apple, Zoom, whatever, for 11 months. And they're all getting antsy because as soon as we hit March 23rd, they're going to want to close out their positions. And I don't think a crash will occur, but the stocks that ran up huge last year will see a correction, and that money is going to rotate into other stocks that are potentially undervalued. Banks have been depressed, energy companies have been depressed, the insurance companies that I'm seeing have been depressed. Those are the stocks that people were worried about investing in because they didn't know how the pandemic would play out, if closures would have continued longer than they did. Of course, there's also the reopening plays like the cruise lines, the airlines, but I feel like that was the more obvious sectors for retail investors to pile into. So those don't really look like bargains to me because those companies had to take on a lot of debt or issue new company stock to stay afloat. So the valuations, I think the big dollar investors are smart enough to look at the books and say, it's going to take a long time before these hotels, airlines, casinos, cruise lines return to their pre-pandemic valuations. So something worth mentioning to you guys is that the more I study options, the more I realize that for true investors, high-level thinkers on Wall Street, they don't care. They don't care if the market goes up or the market goes down because they always make money. When you can observe a trend or you know something is coming, if your assumption is that the market in general or stocks will go down, you have three tools available to you. You can short sell the stock once you have margin enabled on an ordinary brokerage account. You can sell a call option, ideally a covered call. This is stock you already own. You're collecting the premium for owning the shares. However, the price went down, so you're not going to lose your stock. You're still collecting dividends. That's why maybe you bought the stock in the first place. Or you can buy put options, which forces somebody else to buy 100 shares from you. You do this when it's advantageous for you to do a market order and then force somebody else to buy the shares from you at a higher price. So when the market gets wild, or when I read about what could potentially happen in the future, whether taxes will be raised or interest rates will go up, will the market go down? I'm getting to the point where I don't care. Obviously, for the average investor, I have no idea what the number is, but most people out of these 6 resources available to you only do the first one. They just buy stock, and then when they don't want to own it anymore, they sell it. And it's kind of unfair for retail investors or middle-class investors because most people's investments are in their 401k or IRA. But for you know, skilled investors, high-level investors who have been studying options trading, I mean, if the market goes down, you basically just turn from a bull into a bear, and then you start using these three tools available to you. So when I hear about trouble in the market coming up, I'm trying to get my brain around how can I be like the pros, you know, the people that have been doing this for decades on Wall Street. And yeah, I mean, I think these are three great options if the market if the market doesn't look favorable, which I don't think is happening right now. We're about to get a $1.9 trillion stimulus package passed, and it's gonna flood the market, and stocks in my opinion are the best game in town. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you want to learn more about trading options, check out my playlist. I really did try to design this and build this so that a complete beginner could start with this first video and then follow along. This might be more math and more effort than the average person wants to put in, but once again, you know, if you want those tools available to you to keep making money, even when the market goes down, it's really fascinating to me, and I'm enjoying it. If you have any comments or questions, as always, let me know down below. I love hearing from you guys. Till next video, take care.